Hi there. I'm testing algo trading strategies and seeing what the results are. I'm Champion Trader Kevin Davey, and today I'm going to look at this old, dusty, crusty, musty strategy from 2001. How does it do in today's markets? Let's get started. First off, if you haven't subscribed to my channel, please do so. It'll keep me making what I think is pretty great trading content. And leave a comment. Leave a comment now, leave a comment during the video, leave a comment after the video, or do all three. I love to see comments and I reply to comments. Finally, don't forget to give it a thumbs up if you like this video. I'll keep making more. This series so far has been really popular with people, of me testing algo strategies. So if you like it, let me know. I'll keep doing it. Okay, let's talk about today's system. This one I found in the quote-unquote bowels of the internet. It was something that's been floating around for a long time. It was from 2001 originally. It was created by someone who was a popular educator out there for stocks. I'm not going to mention his name because of some issues that I found with this particular person that I don't want to talk about, non-trading related, and I've never met this person or taken any of his courses or anything like that, but it was very popular back in the day. Now what I did is I took his strategy and I modified it for futures. I also simplified it quite a bit. It was a pretty complicated strategy, but that's what I do with a lot of strategies. I take an idea, I modify it, I simplify it, then I go and test it. That's what I recommend my students do too. You take an idea, make it your own, then you go and test it. So the rules, there's so many little nuances. I'm just going to refer you to the Tradestation Code for details because it's hard to walk through all the rules quickly. I tend to like systems that you can write on the back of a cocktail napkin. You know, if it's a high breakout, go long. If it's not, vice versa for short, you know, that kind of stuff. This one's a little more complicated and nuanced. So here's the Tradestation Code. It's actually like 3 or 4 slides here, and I'm not going to discuss all of them, but it uses ADX, it uses the positive and negative DMI, it has some risk percentages. So what it's looking for really is an ADX value above a threshold, and where the ADX is increasing, then you buy. And it's like a vice versa for short, and DMI is in there too. And then there's some different kind of exits that they do there. It looks like uses RSI and some ATR kind of targets, but you know, I try not to judge it until I test it, but just on a high level, this is a little more complicated than I normally test. There are 4 inputs that I optimize, and you can see all those there. They're ADX length, an increase in ADX amount, there's a percentage risk, and there's an overbought level of an RSI. And altogether, 144 iterations. I normally like to keep it under 100. Notice I'm not doing millions of iterations. A lot of the other variables are fixed at a certain value, and the inputs, I'm not trying, you know, ADX links from 8 to 800 in steps of 1. I don't do that. I don't recommend you do it. I recommend keeping the number of iterations low. The number of iterations is pretty important to avoid curve fitting. The more you have, the more chance of curve fitting. I test this using the approach I teach in my Strategy Factory course. It's been voted best trading school, 2nd or 3rd place 3 years in a row, and you can just about anywhere you go on the internet, if you look for reviews of what I do, you'll find that, hey, I'm pretty legit and I do what I say and I'm pretty truthful and open and my course is pretty good. So if you haven't looked into my course, please check it out. Back to the results. So first, what I like to do is I like to test the system over the past couple of years, and I do what I consider a robustness test. I just want to see, is it one set of inputs, of particular inputs, that generates a profit, or is it a bunch of sets? So out of those 144 iterations, I want to see that most of them are making money over a 2-year period. And that's usually, you can use any, I use any 2-year period, but for this case, I use the last 2 years, roughly. And there's actually 72 different market and bar size combinations. I actually tested, I think, about around 50 or so different markets, futures markets, and like 5 or 6 different bar size combinations, going from daily down to probably 60-minute or so. So there's a lot of different combinations that were good, that were, I'd consider, robust. So this strategy seems to be working pretty well in the current day, which is nice. Then if you look at some walk-forward results, this is a European interest rate, FGBS. Not many people trade it. It's pretty similar to a lot of the US interest rates, but sometimes it's a little different. And this is a 240-minute bar. And you can see it's a pretty nice equity curve. It's not the best. It's kind of low sloping, but in the last year or so, it's done really well. And then here's another one with cotton, 240-minute bars. Again, it had a nice run up back in 2011 or so. And then it just kind of meandered up, and then it kind of popped up a little bit. But this might not be a system you could trade by itself, you know, because look, from 2012 to probably 2021, you know, it's not doing a whole lot. But if it was part of a portfolio, you could live with it because it was making some money, and then you live for the times where it pops up, and you can see early in the equity curve and towards the end of the equity curve, it kind of popped up. So that's what makes that one nice. The other thing I like to look at is trading potential. I like to say, hey, what's the potential over the last 15 years, which is what I normally test. And there's, for this particular system, there's 23 different combinations that had what I would call good walk-forward testing results. And you can see a lot of them are interest rates. There's the Euro dollar, the FGBL, the FGBM, the FGBS, and then there's TU and TY, and then there's some other markets kind of scattered in there. But there's definitely potential for this system in quite a few different markets and bar sizes. Those are the results. I have to point out, this is not a fully tested and what I would call an approved strategy. It has to run some more tests before it passes all my criteria. But what I see here gives me some hope that maybe something good will come out of it. It does show some robustness, and it does work in some current markets and some bar sizes. It doesn't work everywhere. I've never found a strategy that does. I know a lot of people say, oh, hey, it should work in every single market. Good luck with that. And as always, test it yourself before trading. Thanks for watching. I'm Kevin Davey. Have a great day.